Hello, trade pros. Good morning. Welcome to Morning Market Update for this beautiful Friday, June the 26th of 2020. This is George Papps of Trade Pro Academy. This is the last Friday of June of 2020. The only Friday, June of 2020, but the last Friday in June. Okay. So what are we going to talk about in today's session? I'm going to talk about a few things. Talk about the Fed's limitations yesterday on the banking industry. I thought that was pretty significant, and it went largely kind of unnoticed or unresponded to. Okay, some coronavirus updates, and that's it. It's going to be a slower day today. We have less in the news press. Yesterday, we started out on the short side. We started selling rallies, and it paid off pretty good in the morning, and then we had to flip the bias to the long side. All right. In today's session, we're going to see what we get, but we are opening a little bit more bearish here. In the morning time, we had a few news reports. Let's go ahead and break all of that down. First and foremost, the Fed is putting limitation on the banking industry as of yesterday. They did their annual stress test, and they found that several institutions could get close to their minimum capital levels, meaning that they don't have enough capital based on the Basel III requirements of maintaining a certain amount of cash to the loan book and exposure you have as a banking institution. All right. The 33 largest banks could hit a total of $700 billion of loan losses under some desperate and negatively evolving situations around the coronavirus situation from here. All right. So another additional 700 billion loss of loans. I say big deal to that. The Fed could print that. Jerome Powell has got to configure that one hand crank of the printing press will spit out probably about $700 billion. And so, when you compare it to what the Fed's done, it's not really a lot of money. $700 billion is not a lot at all in terms of printing. And I mean, look, when it's not tied to any kind of asset or commodity, you could print an unlimited amount of dollars. And it's just backed by the trust of people who are using it. So that being said, 33 banks, 700 billion potential loan loss. All right. Because of that, big banks are going to be required to suspend their share buyback programs for the third quarter. Most of them have already kind of paused the buybacks as of the second quarter. Now they're going to be extending it an additional quarter. So the banks are not allowed to go on the open market and to buy back their own shares, because that'd be using capital that would be needed or be more efficient to be held on for reserves. Okay, so that's interesting. So there's going to be no buying of stocks in the banking sector from the banks themselves. All right, and they have to limit the dividend payments at their current levels. They cannot pay more than a dividend of the last 4 quarters of their full income. So they have to kind of cap the levels that they're going to pay a dividend of. All right. The Fed said that while all large banks remain strongly capitalized for the first time in a decade of doing stress tests, which is when it started by the Federal Reserve, they are finally requiring the banks to resubmit updated capital plans for the first time ever, all of them. Usually it's just 1 or 2 banks, and it's not like the top tier banks. Now they have to resubmit new plans. It's interesting, okay, because the Fed is still concerned, and they're also concerned about liquidity and capital requirements at the banks. And they're so concerned that they're banning buybacks and what they could do in terms of dividend distributions. I find that interesting. The market didn't know. They didn't really care. Okay, because on one hand, the Fed's concerned. On the other hand, you just print a ton of money. However, yesterday, we also saw that the balance sheet in the Federal Reserve shrunk for the second week in a row. All right. If you wonder why equities can't continue upwards, if you've been looking at the stock market and you're like, wow, this thing soared so high, and after going up 300-400, built the confidence to buy some stock in your portfolio, and now that you're long, the thing won't budge above its prior move high. If you're wondering why that is, wonder no further than the Fed balance sheet for the second consecutive week. All right, their assets have declined. Their balance sheet has unwound by not renewing more assets. All right, how does a balance sheet shrink? They don't have to sell the bonds. They just expire and they roll off the maturity, and they don't have to renew it. And so something in my must be sleep. All right. And so what you need to know is this. Go look at the balance sheet and go look at the stock market. You're going to be shocked how well correlated they are. Forget the MACD and your RSIs and stochastics and all these crazy diagrams. Go plot that if you're a longer term trader, and that's all you're going to need. All right. Let's talk about coronavirus. So the new cases of COVID-19 reported in the U.S. yesterday surpassed the highest level ever, more than 37,000 in one single day. That's no good. All right, that's all I wrote down in the notes. No good. This isn't a good sign. Things are reopening again. Yesterday, I was kind of strolling through a neighborhood where our office is and where I used to live. I moved recently, and there's literally dozens of people crammed in patios and not wearing masks, not really socially distanced, and it's all good. At the end of the day, I don't really inflict my opinion on anyone. You guys are free to do whatever you want, but I'd just be really interested to see what happens 14 days from now. And hopefully it's not bad. I'm not saying like you guys wait and see what's going to happen. I hope to God and to higher power that there isn't a second wave. But we'll see. All right. And I think the market's interested in that as well. In terms of markets overnight, Asia, Japan's up 1.1, Hong Kong's down 0.9%. China, India are mixed, up about 0.3%. In Europe at midday, London's up 1.5%, Paris up 1.5%, Frankfurt up 0.9%. So strong gains in Europe. And in the U.S., futures are flat. Now they've rolled negative for the session. They're below the prior day closes on Dow, S&P, and NASDAQ. We are below the prior day close on S&P of 74 even. Okay, overnight high here extended up to 82, overnight low. And we're kind of dead smack in the middle. 5-day point of control at 37.25. Okay, seeing a little bit of sell-off pre-market. We'll see what happens in the open. Crude is up 1 percentage point today after dumping quite a bit. We're still below the 40 marker, but above 39. Gold up 0.2%. All right, and Bitcoin down 0.4. We did have some economic numbers on display today. All right, so we had consumer sentiment. We do have consumer sentiment at 10 a.m. and we had personal income and outlays at 8:30. This number is kind of going quietly underutilized. All right, a lot of traders and investors don't understand these numbers, and it's interesting because they're very important. But if they're not understood, you can't use it for a sentiment index, right? If nobody understands them, they can't really put it into their investing philosophy. Let me tell you what the numbers were. Personal income, okay? Even though it's a low impact indicator, typically, I think it's a high impact indicator during the coronavirus because some of the government checks, all right, that are going through here, it's called CERB in Canada. It's the government assisted income. And you can see that the actual numbers were minus 4.2% versus minus 6% expected. It's not as bad. And the number one thing here that is kind of overlooked by indicators is this report that came out this morning, the core PCE price index. This is what the Federal Reserve uses to decide what inflation is. It's not the CPI. A lot of people say, oh, the CPI is down, the Fed must be freaking. No, the Fed isn't. They're looking at the core PCE price index, and that came out at 1% today. The expectation was 0.9. All right, the high was expected at 1.1. The prior number was 1.0, and it came out at 1.0. All right, so we are still getting slight inflation on a month-over-month basis in the month of May at 1%. Okay, that's old news, though. More people are interested about the June data. And so think about this. All this money that's circulated in the economy hasn't caused inflation. That's why gold isn't going up. You might wonder, wow, the balance sheet is so high. The Fed's buying all this stuff, providing all this stimulus, printing money, devaluing the dollar. Shouldn't gold be trading at 4,000? Yeah, sure, it should. If inflation was up 30%, gold will be trading at 4,000. But gold doesn't move on the fact that the Fed's printing money. Gold moves on the fact that there's inflation. Right now, there is no inflation. Okay, so interesting things are happening here in the market. I don't want to go on for too much longer. 1 p.m. Baker Hughes rig count, 10 a.m. consumer sentiment. Mark it on your calendars. I'm going to start the morning selling rallies. Below these overnight lows, we open up, and we can really jump on this a little bit heavier. Otherwise, we could have an up day. Who knows? We're in the middle of a range, and if you have the right levels, you have the right trades. If you don't, you won't. Have a great weekend. Love you guys. Be safe and stay out of trouble. Let me see what some of these comments are. Thank you, Julian. Thank you, Richard. Thank you, Ad. Lee, as always, thanks for coming in and dropping in some awesome comments and stirring up the discussion. Dan, good Friday morning. Angela, Alex, everyone on YouTube that said hello. Craig, George Mitchell. Pat K, all you guys, love you guys. Be good. Have a great weekend. And we'll see you on Monday. Take care and all the best to you and your families. Ciao. Okay, trade pros in the room. Let's open it up with some levels and trade